Thank you for joining me for a quick look at Warren Buffett's favorite indicator. Now, market analysts often ask each other, what's your desert island indicator? And by that, what they mean is if you had one indicator and nothing else, what would you want to have? And Buffett was once asked this question, and he said railcar loadings. So that was an interesting indicator, obviously. It required a lot of research because not a lot of people were following rail traffic at that time. But railroad traffic is an important economic indicator, and that's because if you think about raw materials, they take up a lot of room. The cheapest way to ship them is by rail. Large finished goods also often move by rail. And construction materials are another rail asset. So if we look at these things, these are the economic drivers, so to speak. Raw materials provide jobs for the producers of the raw materials, the miners, and for the producers of the finished goods. So you get a lot of bang for the buck from railroad transported items. This has actually been known for a long time. Charles Dow created the Dow Jones Industrial Average, perhaps his best known index, but 12 years before he published that, he published the Dow Jones Transportation Average. At the time, it included 9 railroads, a steamboat company, and a telegraph company, and those were the transportation companies of the day. That was in 1884, and he recognized the importance of rail traffic to the economy. Of course, he was seeing it. In the 1800s, railroads were a leading source of economic growth. The government was stimulating the installation of railroad tracks all around the country. Today, railroads still account for a significant amount of transportation. They only account for 9% of all shipments by weight, trucks being the overwhelming major supplier of materials. But there's a transportation measure called ton miles. How many tons have moved 1 mile? And rail traffic accounts for 40% of ton miles, showing their significance to the economy. Now, here's rail carloads, and here's the stock market. And as you can see here, we got the bottom in the rail car loadings prior to the bottom in the bear market of 2002. Then it started heading downwards in the indicator long before stocks topped. So we tend to see that there is a direct relationship here between this indicator and the stock market. So the stock market looks ahead, and it should turn ahead of economic turns, and rail traffic should peak and reach its bottom before the stock market. Now, in the last year or so, we've been getting a divergence. Stocks have been going up, railcar loadings have been going down. In the past, this has been bearish. And you'll probably notice here on the chart that it looks a lot different since the crisis than before. Well, that's largely because of coal. If we take coal out of total railcar loadings, we see we're at a new high. We still have that divergence building, but we're at the right level now. Coal, of course, not being produced as much as it was a long time ago because of environmental regulations and the availability of wind and solar. Other factors include a drop in pulp, wood materials for paper production, and finished paper products. And that's the internet, which has, we don't need to move as much pulp around to make as much paper because we don't produce as many newspapers and magazines. So this indicator is at a lower level, but what matters is still the trend. Here, way back as stocks were climbing, we did have a rising trend here. This indicator did correctly call several of the pullbacks along the way of this bull market. And right now, it's warning us to be careful. Railcar loadings are dropping while stocks continue to be in an uptrend. In the past, this has been resolved with a sell-off in the stock market. It's Warren Buffett's favorite indicator for a reason. We don't know exactly what he's looking at right now, but we're pretty sure he can be looking at the same data as us and coming to the same conclusion. It's time to be cautious in the stock market. Thanks for joining me for this look at Warren Buffett's favorite indicator.